Christopher Lewis from the dailyforex.com trading desk, taking a look at the upcoming March 16th Forex session. Pair in front of you is the euro dollar. And as you can see on this chart, I have daily candlesticks and have placed support and resistance lines every 500 pips. The reason, of course, being that this pair tends to follow the 500 pip rule. In other words, there's almost always a reaction every 500 pips. You can see 130, 135, 140, and if you zoom out far enough, you will actually see 145. 125 is a little bit below this, but you get the idea. You can see that there's definitely a reaction at one of these, or each one of these. Currently, we find ourselves slamming up against the 130 level, and this is a result of massive support in this area, which I actually have as 131 to about 129. You can see that the bottom of these hammers fell to right about 129. There's a hammer at 129 there, a hammer at 129 there, so there is a precedence for this. Most traders I speak to have a problem with the 200 pip thick zone, but essentially that is because they look at things in the small time frames, the small picture. Reality is 200 pips in this pair is nothing. You look at it being at 130, well, 200 pips out of that really isn't a large percentage of the value of the pair, and you have to think of it in those terms. Not all areas will be like this, obviously. 135 is fairly cut and dry. So this suggests to me that 130 is truly a major area. And with that in mind is how I build my thesis. The pair is most decidedly in a downtrend, at least recently. You can see that from this plunge, draw Fibonacci, you can see the 50%, which is right up below the 135 repelled prices, and we are now sitting on top of the 23.6%. Add that with the support that we have going down to 129, and it becomes very apparent to me that 129 needs to be overcome to the downside for the selling to continue. If we get that, we will more than likely head to 125 and pause and perhaps 120. The recent quote-unquote fix in Europe is simply another band-aid, as the Greeks got bailout money, but it really hasn't fixed things structurally. Another problem you're going to run into in Europe is they vote, and they vote people in who tell them things they want to hear, same as everywhere else. And as such, it's very possible we may see a bit of a backlash in places like Greece, who've been suffering through austerity for quite some time, and as such probably wouldn't mind the idea of somebody who ran on the platform of, we're not paying these debts back and we're done with this. Very high likelihood of something like that happening, and those elections are coming up at relatively short order, if memory serves me correct. Also to consider is that Mario Draghi is much different than Trichet. Draghi seems to want a weak euro, and quite frankly, I think he needs one with the economic situation that you have in Europe right now. They need some way to spur growth. He is much more like Bernanke than he is like Trichet. Conversely, if we get a little bit of a bump, I think that the 132.50 level could provide resistance again. And of course, I feel that way about 135. It is not until we get post 135 that I consider buying this pair. There's just simply far too many problems in Europe right now to get involved with it. The dollar is the safe haven trade, and quite frankly, the U.S. economy is humming along comparatively. In this new world that we find ourselves in, the 2% or so that the U.S. is growing is pretty robust. Europe is heading into recession, so odds are the euro will weaken anyways. Add to that the fact that U.S. Treasury yields are climbing ever so slightly, it makes it a little bit more attractive to send your money to the United States. Again, though, we need to see 129 give way, or I need to see a bit of resistance, perhaps a shooting star or something to that effect at 132.50 or 135. My downside target is at least 125, but there are many analysts calling for 120 and below by the end of the year. If 129 gives way, I think that would be the start of some type of move like that. As I'm sure you are fully aware of by now, this pair won't melt down on one direction for very long, it will chop around. So even if we get our sub 129 close, it's very likely that we're going to have to hang on for quite a bit of a ride on the way down. Again, I am not buying this pair until we are above 135 and something changes in Europe, which I just don't see happening anytime soon.